Troubled Assets Relief Program, TARP, 2008, $700 billion in government relief to banks in 2008 because of the overvaluing of real estate assets. The government stepped in and bailed out U.S. banks initially in the amount of $700 billion, final amounts topped threefold the initial amount, The government asked for an equity stake in the U.S. banks in return, making this one of the most aggressive intrusions into private business ever initiated by the American free market system. The banks were to use the money to start to loan again, to help the U.S. economy recover from depression conditions. Cost basis. Original price paid for a capital asset. Cost basis is typically the original price paid for a capital asset. The adjusted cost basis includes improvements to the capital asset. A home was purchased for $246,000. That is the home's cost basis. $50,000 in improvements were performed, replacement double pane windows, central air, new carpet, the 3 bathrooms upgraded, new kitchen cabinets, a pantry, new garage door, paint inside and out, and landscaping, The adjusted cost basis is $296,000. The cost basis and the adjusted cost basis are used for depreciation for taxes and sometimes within business accounting. The cost basis is usually the original price paid for a capital asset. Related words: capital gain, capital loss, capital improvement, adjusted cost basis. Non-money encumbrance, easement, restriction, or an encroachment. An encumbrance is a restriction of some kind on a property. A money encumbrance is a financial restriction like a trust deed, mortgage, mechanic's lien, judgment, attachment, or a tax lien, something which results in money being owed. A non-money encumbrance is something that restricts the transfer of a property but is not based on money owed. The non-money encumbrances include easements, restrictions, and encroachments. An easement is when someone else has the right to use the land of another owner. Having your property used by another might make it harder to sell the property, but there is no money owed as a result of the easement. A non-money encumbrance is a restriction to property transfer which does not require money to be paid. Depreciation for tax purposes. Loss of value of real property to get a tax deduction. Depreciation is a loss of value in real property because of age, economic obsolescence, functional obsolescence, or other reasons. Appreciation is the opposite of depreciation and can result from inflation or improvements. When it comes to depreciation due to age, there is actual age, which is the age of the structure, and effective age, which is actual age accelerated by more rapid deterioration or reversed by improvements which back up the effect of actual age. There are 2 types of depreciation: curable, which can be fixed, and incurable, which are things that cannot be fixed. Depreciation for tax purposes usually uses a straight line method based on the cost basis or adjusted cost basis and divides it by the allowable number of years, say 25, and deducts that amount each year until 0 is reached. Depreciation for tax purposes is more about providing a consistent and easy way for people to generate a depreciation number for their taxes. Depreciation is the loss of value of real property, and depreciation for tax purposes is the loss of value for deduction purposes. Antonyms: appreciation. Federal Home Loan Mortgage Corporation, FHLMC, Freddie Mac. Organization to create a secondary mortgage market. The Federal Home Loan Mortgage Corporation, FHLMC, or Freddie Mac, is a government-sponsored enterprise, GSE. A GSE is a congressionally chartered, shareholder-owned corporation. Freddie Mac was created to provide liquidity for home ownership by purchasing mortgages originated by thrifts through what is called a secondary mortgage market. Freddie Mac purchases and, or quote, securitizes, end quote, or packages or pools the mortgages made by thrift originators so that large investors like insurance companies can purchase the packaged mortgages as investments. Freddie Mac is a government-sponsored, shareholder-owned corporation which supports the secondary mortgage market by buying mortgages, packaging mortgages, and selling those packages as investments to large investors like insurance companies. Power of attorney. Giving another the authority to act on your behalf. Power of attorney is giving another person the authority to act on his or her behalf. There is a legal piece of paper on which such authority is granted called a power of attorney form. To cancel a power of attorney, a revocation is required. Special or specific power of attorney is the authority to act on a singular topic or capacity. General power of attorney is the authority to act on all aspects. The agency relationship of a real estate broker/agent and a principal is a specific agency because it only deals with the real estate and not other aspects of the principal's life. Related words: revocation, agency, special power of attorney, general power of attorney. Contract for deed. Real property installment sales contract. There are many names for this type of transfer: land contract, land sales contract, conditional sales contract, agreement of sale, contract of sale, contract for deed, installment sales contract. A contract for deed is when the current owner sells his real property to another on an installment basis. When the buyer is done making installments, the title is turned over to the new owner. Many call this, quote, creative financing, end quote, because a seller may have existing financing on the property. If the agreement is not recorded, not recommended, end then the transaction may not trigger the original owner's finance due on sale clause. So the property can be sold without having to bother the bank. But make no mistake, a contract for deed is a transfer, and so legally the due on sale clause has been activated. A contract for deed is an agreement to transfer a property to another on an installment basis. Probate sale. Court-allowed sale of asset of the deceased. The probate sale is a court-allowed sale of the assets of a deceased person. There are rules to selling real property through a probate sale. A purchase offer price must be at least 90% of the appraised value of the real property. The offerer must petition the court, have a hearing, and at the hearing others may also bid. For bidding to start at the hearing, there must be another offer of an increase of at least 10% of the first $10,000 of the original bid, and an increase of 5% of anything over that amount. The court has to confirm which bid it will accept and confirm the sale. The court sets the commission paid to an involved real estate agent. The court's confirmation starts the escrow process. A probate sale is a court-allowed sale of assets of a deceased person. Ratified. Approved after the fact. To ratify is to approve or sign after the fact. In real estate, ratification is used to explain ratification of agency. If an agent, without approval, acts on behalf of a principal and upon finding out the principal does not object to the benefit received, then the agency relationship is established by ratification. The elements of ratified agency are unapproved, non-objection, and benefit. The word ratified itself, however, means approved after the fact. Capital gain/capital losses. Profit on real estate or stock above the price paid. A capital gain is a profit on an asset, typically stock or real estate, sale above the cost basis. The cost basis is the price paid for the asset. The adjusted cost basis is the price paid for the asset plus any capital improvements. The gain can be taxable either as a short-term capital gain or a long-term capital gain. At this writing, a short-term capital gain is measured as an asset purchased and sold within a year's time and is taxed at the regular income tax rate of the person who made the capital gain. A capital gain is when the selling price is above the cost basis or adjusted cost basis, and a loss is when the selling price is below the cost basis or adjusted cost basis. Related words: cost basis, adjusted cost basis, taxable gain/loss, capital improvement, short-term capital gain, long-term capital gain.